what we want to do this evening is to walk through the role of the controller, the importance of this role, and to start it off in terms of the development of the strategy for what your role is related to this. Okay? So let's just sort of talk through this. So we're going to be talking about course objectives. I'll spend a little bit of time talking about the assignments, the chat structure, role of the researcher, some ethical issues, strategic planning, and so forth. Okay, so you see here we've got a lot of things that we're going to be talking about. We're going to be talking about the controller. We're going to be talking about strategy. We will be talking about the internal audit department. I think some of you were in my internal audit class last semester. We'll be talking about some very specific things in terms of managing cash, managing inventory, controlling liabilities, controlling shareholder equity, mergers and acquisition, and so forth. Okay, so we have a maximum of 26 attendees, which is kind of interesting. Not quite sure if we have more than 26 students, but in any event. So I thank you very much for your attention this evening, and as I'm going through this, people that are signing on, you need to put your phone on mute just so that there's not a lot of background. If you do need to say something, just let me know and I can turn your voice on. But in any event, so we're talking about the controllership from the perspective of what he or she is actually doing. And what this person is going to be doing is looking at cash, looking at inventory, controlling liabilities, making payments, controlling shareholder equity, looking at mergers and acquisitions. So there's a lot of things that are involved in the role of the controller. Certainly planning and control of capital assets, the whole process of budgeting, specifically for capital budgeting, is an extremely important perspective related to what we're attempting to do. And in regards to the strategic plan of the organization, is understanding the financial aspect of the strategic plan is absolutely critical to the success of the organization. Okay, so let's just sort of talk about this. Whoops, want to go back here. There's actually not 4 homework assignments, there's 6 homework assignments. I apologize, that actually needs to change. So there's 6 homework assignments. There is a final paper and final exam, and then there is a written paper. What you see specifically related to the written paper is that the written paper is taking a topic specifically related to controllership and expanding on it from a very practical perspective, where you're looking at references, where you're kind of doing a deep dive in this. So what I did is I set up a discussion area, and what I'd like for you to do is in the discussion area just to outline your topic area that you want to do. Once I see the topic area, I'll take a look at it, maybe make some recommendations, and tell you basically go for it, or maybe make some modifications. And the reason I'm having this in the discussion area is I always find that some of the students struggle with defining a topic area, and what I think you'll find is that as you are looking at other people's comments in relationship to what they're doing, is you're going to get some ideas specifically related to what you want to do. Okay? So in any event, and actually I will tell you that there's 42% of the grade is homework assignments. So there's actually 7 assignments, and each of these are going to be worth 60 points. So 60 times 7 is 420. The paper is 250 points. The final exam is 250 points. And then the chat and attendance, chat participation, the fact that you're actually here, you're going to get 2 points for each of the 8, actually 1 point for each of the 8 chat sessions that we're involved in. Okay, so I'll plug those in as we go forward. Okay, so that's kind of what the strategy is. The last time I taught this course is we only actually had 4 chat sessions, or 5 chat sessions. Now we're up to 8 chat sessions, and it's a 15-week course. So we have an opportunity of actually expanding on the kinds of things that we're talking about. And so I added a few additional topics related to this. Okay, so I clearly expect you to read the material before each chat session. The PowerPoint slides will guide you related to the meeting. Feel free to ask me any questions. Just based upon the way this works, it's actually easier if you type in your questions as opposed to trying to talk through these because I have everybody on mute. If I don't have everybody on mute, it actually creates a problem related to just the flow of the material, and we get a lot of excess noise. Okay, so let's talk about the controller. Controller is sometimes called the Chief Accounting Officer. The Sarbanes-Oxley has significantly increased the role of the controller, and one of the things that the controller is involved with, especially in a publicly traded company, is making sure that the organization is compliant with the rules related to internal controls. Okay, so I have a question here related to the assignment. The first homework assignment is available, so you can kind of take a look at this. The homework assignments are actually a combination of calculations as well as sort of narrative comments that you need to make. So if you go to the assignment, the first assignment is available, and the way I have this set up is that every assignment is due the next chat session. Okay, so the next chat session is going to be in 2 weeks. So you basically have 2 weeks to respond to the questions and then submit the assignment. First assignment is actually pretty easy. It's very difficult to not get this one right, but that's basically it. So as we're going forward through the material, there's going to be calculations that you need to do, maybe in terms of ratio analysis and other things. But in regards to the first assignment, it strictly is just a couple of narrative things in terms of what is expected related to the controllership. So again, the first homework assignment is available. Make sure you can confirm that it is available, and just download it. It's not timed or anything, and then simply just write out the narrative and submit it. Again, some of these are going to be calculations, but none of them are timed in relationship to what it is that we're trying to do. Okay, so that's okay. So it is available, and it's a course that learn a lot, but you're not necessarily going to be overtaxed in terms of what it is we're trying to do. Especially if you have taken any managerial accounting or cost accounting classes, it's basically a lot of the same kind of thing that we're doing here. Okay, so in any event, Sarbanes-Oxley increases the role of the controller, specifically related to internal controls, and the controller is involved with financial management, internal audit. The controller would never be in charge of internal audit, but the controller would be working with the internal audit department on many projects. Certainly they're involved in tax, corporate finance, and strategy. One time when I was interviewing for a job, I was actually offered the job, but I didn't accept it, but it was a controllership job. And the controller's job was going to be responsible for financial reporting, for payroll. So my role would be that the payroll director would report directly to me. Accounts payable would report directly to me, and the purchasing process. So essentially, in this case, is the role of the controller was involved in the complete purchasing cycle in terms of purchasing reported to the controller, accounts payable reported to the controller, as well as payroll. actually just today I received a job listing. I get these all the time. Doesn't necessarily mean that I'm qualified for it, but it was a job for a vice president of finance. Vice president of finance is probably one role greater than the controller, but actually has a very interesting dialogue in terms of what this position is. I'll actually post this just so you can kind of get a feel for the broad spectrum of what this controller or this type of position is actually involved in. Now you notice that planning and budgeting, why was I not? Maybe I am. Maybe that's why they sent it to me. The gentleman that sent it to me was looked at my LinkedIn account and sent it to me. I actually maybe I am qualified. I have moved over to academia 100%, and I'm not necessarily looking for that day-to-day operation or that day-to-day grind in terms of a position like that. So so that's kind of what what my role is, and but actually, maybe at a different point in time in my life, I would be very interested in that. We can talk about that offline in terms of sort of what I want to be when I grow up, but I don't have too many years left, and I want to sort of focus on what it is that I'm trying to do. Okay, so that being the case, is the controller is going to be very interested in the planning and the budgeting process, and in fact, maybe the budgeting manager is going to be reporting directly to the controller. Performance major, let me just sort of put all of these other issues here. Okay, so if this is a publicly traded company, the finance department, primarily focused on the controller, is going to be responsible for the group that actually does the 404 testing. So the 404 testing is the testing where we are basically doing the internal controls over financial reporting testing. So the internal control over financial reporting testing is a requirement of Sarbanes-Oxley Section 404. And you talk about this in your auditing class. Now, this doesn't necessarily have to be done by internal audit, and in fact, it can be a component of finance or the accounting department, and those individuals are probably going to be reporting to the controller. The actual financial reporting is basically a responsibility of the controller. And then what you notice here is the performance measure. One of the things that becomes very interesting is organizations generate a tremendous amount of data. And within this tremendous amount of data is we use that information for decision support purposes. So we help management make decisions. So in the job position that I'll actually post online is basically the decision support team is reporting directly to the controller. And just kind of keep in mind that the controller is responsible for all this financial data. Now the issue becomes that in managerial accounting type decisions, which really is part of the decision support team, is they are using this information to help management make decisions. Okay? The next piece of this is risk assessment. I'll actually post a short video that I've done for my auditing class, specifically related to risk management. And I talk primarily from the perspective of senior management, but clearly this role of the controller, and especially as he or she moves through the organization, is a primary component of this enterprise risk management perspective. And again, as we're talking about before, is human resources, specifically human resources and payroll, may be reporting to the controller. IT may be reporting to the controller, and the controller may in fact be what we call the chief financial officer. So it really depends upon the organization and the structure of the organization in terms of where this controllership position is. Whatever the case may be, the controller is absolutely responsible for a tremendous amount of data that's generated for financial reporting purposes and for decision-making purposes. And if he or she is not necessarily making the decisions, he or she is going to be using this information to help management actually make the decisions. So let's talk about this from the perspective of some other issues. The controller has an impact on the culture of the organization. When you listen to the presentation that I give specifically to enterprise risk management, it talks about culture as being a critical component of the ethical values of the organization. In what we call the COSO model, which you talk about in auditing, we use this term tone at the top. So basically, senior management, of which the controller is a part of this, defines the culture, defines the ethical environment of the organization. Keep in mind that the controller probably knows more about the intricacies of the financial position of the organization, knows more than anybody else in the organization. There's no question about it. And he or she has the ability to actually impact what the financial results are going to be. Keep in mind that many of the decisions that are made in terms of management estimates are coming directly from the controller. Now the issue becomes is how is the controller actually making these decisions? A couple of them, just right off the top of my head, include like the allowance for doubtful account or the useful life of equipment in terms of defining the depreciation expense. So all of these things really are decisions of management, primarily decisions of the controller in his or her office. And the question becomes is, are we making these decisions from an objective perspective, or are we making these decisions in terms of sort of pushing the financial results one direction or another? And we use this term earnings management. Earnings management essentially is where we're using the estimates to basically define the final outcome of income and assets within the organization. The controller clearly should not be looking at this from the perspective of an earnings management, but clearly looking at it from the perspective of making objective decisions. And these objective decisions are really a part of the ethics of the organization. So if the ethics are not there, then it's very difficult for even an outsider like an auditor to come in and make sort of an assessment of the fair presentation, because in fact there's so much of what's going on in the financial statements that are clearly related to management estimates. We also want to consider control over assets. So the control over assets are how are these being used? Are they being used in the course of business, or are we allowing individuals to make personal use of assets? Again, part of the ethical arrangements within the organization, as well as what we're looking at granting credit, writing off accounts receivable, approving new vendors. And we'll be talking about this, and this actually is very, very interesting. And we sort of are moving towards what we are looking at from an audit perspective in terms of internal controls within the organization. But as an example, the controller, or his or her position, is really responsible for establishing these ground rules or these very strict policies for granting credit. Granting credit essentially is this whole concept of controls up front, making sure that people that are buying our goods and services are worthy of credit and we're actually going to get paid, which ultimately is very important. We clearly want to make sure that there's policies and procedures related to accounts receivable write-off, and very possible those accounts receivable write-offs are going to come from even from beyond the controller's position and maybe from the Treasury Department. If the controller is involved in the purchasing cycle, the controller needs to establish some very specific controls related to establishing new vendors. And again, we'll talk about these things as we go through the process, but these are some of the things that the controller is absolutely involved with. We establish policies and procedures, and we follow policies and procedures. One of the things that we're very concerned with, at least from an audit perspective, and this is certainly something that the controller needs to make sure that they're following the rules, is this whole concept of management workarounds. So the idea is that, yeah, these policies and procedures, everybody needs to follow these rules, but we're not going to follow these rules. We're going to do things our way. And these workarounds create significant issues from a control perspective, and they should not be there. And again, if you have an ethical environment where the ethics essentially emanate from management, the controller is part of this management, then we're not really going to have a problem specifically related to following the policies and procedures. Once those ethics go away, then basically everybody is going to do their own little thing. Okay. So let me go back to policies and procedures. I'll kind of give you a couple of other things to kind of think about. These policies are in fact the controls that have been established by management. The controls that are established by management, and again, as we're talking about these very specific things, really related to the kinds of departments that the controller is involved with, is we need to establish these policies from the perspective of making sure that there's segregation of duties, making sure that there are role-based controls so that one person doesn't have the ability to do more than a single component of a larger process. So as we're looking at these are the kinds of things that the controller really has an impact on, and the controller may be responsible for IT, and if he's or she's not, is going to be working with IT. Many of these procedures and these policies are going to be established in the IT system, and some of these things we're going to be talking about as we go along. Okay. Professional guidelines, a couple things that actually would be very interesting for you to pursue. Certainly the AICPA, we're looking at that from the perspective of looking at your CPA. Clearly, there's no question but your CPA should be your sort of grounding point related to your career. But then the next question becomes is, well, then what do we do with this? Well, we could go the IIA route, which is the Internal Audit Association, and maybe get what we call a CIA, which is a Certified Internal Auditor. That's sort of pushing your career more towards the audit side. I received that accreditation. But then the IMA is actually very interesting. And let me see if in fact I can go to the IMA website here. And let's just sort of see over here. I'm going to go to IMA. Not CMA. Okay. Go over here, and hopefully you're seeing this. If you go to the Institute of American Association of Accountants and Financial Planners, is what they have is they have a CMA certification. The CMA certification is which is called a Certified Management Accountant. And frankly, if the direction that you want to go in your career is towards the controllership, is certainly the CMA is the direction that you want to kind of consider. This actually is a very good organization to work with. You take a look at this, you'll see that there are a wealth of information for students, and I think there's a student membership that's actually very, very inexpensive. So if this is the direction that you want to pursue your career, this might be something that you really want to kind of look at in terms of some options. Okay, so let's go back to our material and take a look at this and see where we are here. Okay, follow policies and procedures, certifications. One of the things that certifications does, oh, by the way, the CFE is the Certified Fraud Examiner. Certified Fraud Examiner should not probably be your first certification, but certainly is something to consider, especially if you're kind of looking more towards the fraud aspect from an internal audit perspective or an auditing perspective, possibly from a controller perspective, but frankly, I'm not sure that I would see a lot of controllers with the CFE. If you're a controller, or if you're trying to pursue that direction in your career from a controller perspective, I definitely would consider the Certified Management Accountant from the IMA organization. Okay, and professional certifications adds to your professional background. There's no question about that. And as you're a controller, consulting an attorney, you clearly want to sort of consider this and make sure that you are friends with the attorney and you have a relationship with the attorney for the organization that you can call up and have quick phone calls in terms of, is this okay, is this not okay, tell me what you think about this. A very good starting point, and it's very important that you understand this, because as you make decisions, the worst thing you want to do is make a decision that is beyond the scope of your expertise, and you and the organization get in trouble. So you have an attorney that you're able to call, and usually organizations will have an attorney on a retainer where you're not really concerned, all these little questions you can be answered without worrying about excess costs, but you've got to have an attorney, because again, your expertise as an accountant goes only so far. You need to have the expertise that sort of goes beyond this as you are moving through your career and attempting to do your job. Okay, and it gives the example of Betty. She's the accountant at WorldCom, and she was one of the whistleblowers of WorldCom, and getting all kinds of little things here. People are trying to contact me, but in any event. Very interesting stuff in terms of ethics and so forth. Components of planning. Strategic plan, a general outline of the firm in terms of characteristics and objectives. So one of the things that we want to sort of talk about is, what is the strategic plan of the organization? And it's absolutely critical that we understand this as the beginning point in terms of our planning. And certainly when we talk about planning, we're talking about things beyond just the day-to-day operation. We're talking about planning from a budgetary perspective, planning in terms of who we're hiring, how many people we're hiring. We're talking about planning from the perspective of capital budgeting, what equipment we need to buy, what buildings we need to buy, what direction we're going internationally, what's our competition. All those things really drive the planning and the strategic plan of the organization. We need to understand from the strategic plan, how does this relate to new products and markets? So the idea is, what products do we have? What products do we not have but we need? What markets are we strong in? What markets should we invest in? Should we be international? Should we focus locally? Should we manufacture locally? Should we manufacture internationally? All of these questions become critical in terms of our discussion of where are we going to go within the organization. And as we are developing these things, we need to understand that every decision that we make is going to create risks. It's going to make sure that we need to have the resources to make sure this is successful. And the problem is that as we are making these decisions, many of these decisions are not going to be correct. So as we are in sort of the process in terms of this decision making is going to be a very fluid process. So we are where we are right now. We know where we want to be in 3 years, and 5 years, and 10 years. Well, we don't sit in a meeting, make our decisions, go out there, implement the plan, and not ever consider changing it. Absolutely not. As we are moving forward, is we need to have this feedback mechanism so that we can then make changes in relationship to the plan. And again, sometimes the controller is at the role of the strategic planning of the organization. Frankly, he or she should be. But even if the controller is not actually part of the decision-making process, I can guarantee you that every decision that's going to be made requires a data analytic look from a financial perspective, and the controller is the one that's actually providing that information. So we threw out the term a few minutes ago in terms of decision support. Well, decision support is a part of sort of this process, and decision support is kind of this application of managerial accounting where we're using data from the organization, some financial, some otherwise, but what we're doing is we're using this in terms of helping the organization make decisions, make strategic decisions in terms of where we should go from a strategic perspective. Once this decision has been made, then we need to operationalize this plan. So we operationalize this plan in terms of making sure that we have the resources to support the plan. And I'm sure at some point in time you're going to be taking some sort of strategic planning class. But the idea is that if you make this great plan and you prepare for it and it doesn't work, well, you've basically invested resources for naught, which is a problem. But just as much of a problem is that if you make plans and these plans actually have the potential of being successful, but you haven't operationalized this plan in terms of providing support, in terms of equipment, in terms of personnel, in terms of growth of the company, then that could be just as detrimental to the organization. And in fact, many organizations will see that their risk is maybe higher when there's a significant growth as opposed to an organization that's relatively stagnant or growing very slowly. So growth creates risk, and as we're growing and we're expanding, is our risks increase. The ability to actually sort of plan creates additional problems for us in terms of this overall process. And these are the kinds of things that we're dealing with specifically related to the our plan as a controller. Okay? So part of this strategic plan is to set guidelines and policies for the organization. We need to understand the needs of the organization from a capital perspective. We need to understand the needs of the organization from a personnel perspective, IT, so forth. And we also need to understand that as we are developing the strategic plan, some things will work, other things will not work. So we do have dangers in these plans, and the issue becomes, and this is sort of where we go back to the monitoring process, is we want to make sure that we're monitoring, whoops, sorry about that, we're monitoring the organization from the perspective that people are actually at the, so people are at the right place at the right time, and if we need to make changes in the strategic plan, is that we're actually able to make changes in the plan to address the changing needs of the organization. This is where this flexibility sort of fits in related to this overall process. We need to have a clear statement of the company's purpose and a strategy to accomplish this purpose, a statement of specific goals and means for measuring progress. So this is what we're talking about in terms of monitoring, is we're going to develop a plan, and we'll talk a minute or two about sort of how to what are some of the issues related to developing this plan. But as we have this plan, we then need to establish specific goals and a specific means of measuring our progress. So we're not going to get from A to B in one single step. We're going to get there in many incremental steps. And what we need to figure out is, are we on target or are we not on target? So that becomes very important as we are working through this process. One of the things in terms of the organization as it's developing the strategic plan is it's very critical that the organization understands where it wants to be and how much risk it's willing to make in regards to moving that direction. So one of the terms that we use in strategic planning is we use the term risk tolerance. So if we are a not-for-profit organization, we may in fact have a very limited strategic plan. We're not necessarily wanting to change the world. What we're looking for is establishing ourselves as a significant entity and growing from this in very incremental steps. Okay, so that's one perspective. This would be where the risk tolerance is very low. Whereas if we are an entrepreneurial company and we have a high risk tolerance, and the high risk tolerance is because this is the only way that we're going to grow, is in a high risk tolerance perspective, is the organization is going to move in a direction that requires a tremendous amount of measuring and making sure that we don't veer off a path, which could happen very quickly, and change the course of the organization. This happens at a very high level into defining the company purpose. Where are we going to go? How much risk are we willing to take in terms of moving towards these goals? We then, from there, need to have a specific statement of goals and a means for measuring this. And again, this is where the controller comes in, because the controller is going to be the one that says, we are here in regards to this overall process. Okay, assumptions used and needs and so forth. All of these things is really going to be driven by the controller. Okay, so let's kind of look through this and look at a couple of other components that I think become very interesting when we talk about different levels of strategy: corporate strategy, resources, businesses that we need to can compete in. This is at the corporate level. And one of the things at the corporate level is that we need to consider is every decision that we make is probably going to require resources. These are going to be financial resources. So the issue becomes is, where are these resources going to be? Are we going to borrow the money? Are we going to issue stock? Are we going to hopefully or possibly use funds from continuing operations? Understanding where the resources are going to come from in terms of investing for the future becomes very important. And the next question is, so what business should we compete in? Well, if you have a very successful business, but technology changes, well, then the question becomes is, should we continue on the same path? I mean, just kind of consider Kodak. Kodak was certainly a benchmark in terms of providing film and cameras for picture taking. Well, guess what? Technology changed, and Kodak never quite understood what business they were in, and they've struggled in terms of survival. So we need to understand what it is that we're in, and we don't want to have it too narrow, although we don't want to have it too broad. Once we define this, and again, the corporate strategy is probably not going to come from the controller's office, but the controller's office is really, other than the resources, defining what's the best way in terms of funding these items, but defining where we're going to come from is going to be probably a board level decision. Once we define that, then the next question is, what is the business strategy? So the business strategy is, how will we compete? So what's our marketing strategy? How are we going to differentiate ourselves from our competition? And certainly the question that every salesperson is going to ask themselves is, why would a customer buy from us as compared to the competition? So these are business strategies that essentially are going to be driven by our corporate strategy. The accounting system provides data that supports decisions at both levels. Certainly we're not going to be making a lot of these decisions, but the data that's coming from where we are as the controller is the information that's going to help us. We understand that unexpected events will reduce our ability to implement a strategy. We have operational risk, asset impairment risk, competitive risk, franchise risk, and so let's just kind of talk about a couple of these things. From an operational perspective, the issue becomes are we essentially supporting the plan appropriately from an operational perspective? Do we have the right people? Do we have the right number of people supporting this plan? Do we have the appropriate assets? Do we have the appropriate training? Is human resources in place so that they're able to hire the right people, bring them on, train them, and make them operational as soon as possible? When we look at assets, the issue here is, do we have the right assets? Is the equipment, are the buildings, are the locations the appropriate items, things that we need to move the organization forward? And if we buy things to move in a specific direction that doesn't necessarily work, well, that's a problem. And then we have the risk related to our asset impairment from a competitive perspective, from a reputational perspective. All of these things are essentially part of the strategic risk. So we do have pressure to grow. We've talked about culture. We need to understand that within an organization, we need to have the right information. We need to have the right control framework. And when you start looking through this enterprise risk management perspective, what you're going to see is that this is really driving sort of how we are managing the risk related to the organization. And it really is a top-down process. So that, again, if it doesn't work, it's senior management that's made the wrong decision. And senior management makes these decisions. One thing to make a decision in terms of the direction that you want to go, but it's a much more difficult decision to make sure that the culture and the infrastructure and the controls are there to support these decisions. The controller's area should provide measures concerning the significance of these risks. And again, This is what we're talking about in terms of the support services that are supporting the strategic decision. And what we're looking for is that feedback mechanism to make sure that the support services, marketing, production, and other support services are actually at the right place and the right time in terms of addressing the needs of the organization. Critical success factors is we need to measure what the organization is doing. We need to make sure that they're on track for achieving these goals. And I like this, don't measure just because we can. The problem with measurement is that if people are judged based upon a measure, and once you establish a measure, that's going to be what people are going to be looking at, is make sure we're measuring the right thing. Make sure that we're measuring the kinds of things that actually have a positive impact on the organization. This can be financial or non-financial, and this is kind of where we talk about the balanced scorecard. We'll talk about this later on. Basically, the balanced scorecard is essentially looking at things other than financial measures that essentially are going to guide the direction of the organization. And again, these measures are usually established in such a way that they're going to drive the bonuses for executives and key managers. And again, if you have a financial incentive, make sure that that financial incentive is pointed in the direction that if the person achieves this financial incentive, is that we're closer to our goals of the organization. So as we talked about, even if the controller is not necessarily involved in the decision process, he or she is very typically and most probably involved in identifying the critical success factors, and we're getting this from the accounting system. We're using the accounting and non-accounting information that is generated by transactions and using this to help the organization make decisions and help the organization actually determine where they are in regards to their goals. We need to understand that the controller is absolutely going to be involved in the capital investment plan, evaluating and ranking projects. Possibly we're going to be ranking these projects from a number of perspectives including risk. Budgeting absolutely is a critical component of what the controller is doing, and we need to understand that the controller has an impact on growth, internal controls, and the financial reporting. So he or she is a member of the organizational leadership team, and in most cases the controller is attending the board level finance meetings and may in fact be participating in those. Okay, so we've talked here for about an hour, and this actually is a very good introduction in terms of what we're attempting to do related to the controllership job. You'll see the homework assignment, not that difficult, at least this time it's not that difficult. And what we're interested in at this point is really to take this information and to understand the controllership role from the perspective of what he or she is doing sort of on a day-to-day basis. And I think this course does an excellent job related to this, and we have a lot of things that we talk about both from a analytical perspective as well as a strategic perspective that should be a very positive thing in regards to this class and in regards to you as you're considering your various career options. So thank you very much. Everybody have a great evening. Okay, bye-bye.